The National Stock Exchange, or the NSE, established in 1992, was the first in India to offer fully automated electronic trading. Its benchmark, Nifty 50 index, includes the 50 largest and most actively traded companies on the NSE. In contrast, the Bombay Stock Exchange, or BSE, was founded in 1875, is almost 118 years older than the NSE. Its benchmark, Sensex index, tracks the 30 largest and most traded companies on BSE. But should we invest in NSE or BSE? And what exactly differentiates them? Hello and welcome to Alice Blue, where we simplify everything you need to know about investing, trading, finance, and more. For ease of understanding, we're going to divide the comparison into 3 rounds. Let's start with round 1, liquidity. Liquidity refers to how easily and quickly an asset can be bought or sold in the market without significantly affecting its price. Or in simple terms, if you can buy or sell it instantly at a fair market price, it is a liquid stock. But if it's hard to find a buyer or seller, you may have to wait or sell at a worse price, it becomes an illiquid stock. Liquidity is measured using the turnover rate. Turnover rate refers to the rate at which asset or securities are bought and sold within a specific period. A higher turnover rate means higher liquidity. Let's check the turnover of both NSE and BSE to decide our winner. This is the data of the past couple of days of April 2025. If we take this data and plot a graph, we can clearly see that NSE has a higher turnover rate as compared to BSE. Not just this, a higher liquidity rate increases the trading volume, meaning the number of buyers and sellers also increases. Hence the higher number of active trading in NSE. And with that, we get a clear winner for round 1. Let's move on to the next round, derivatives market. It's a market where people trade contracts or derivatives whose value is based on the value of an underlying asset. Keep in mind that it is not the asset itself, but the agreement is based on the asset's price. For example, say you think the price of coffee is going to go up. So instead of buying a truckload of coffee, you buy a contract now for a lower price. So if the price of coffee indeed does go up, you can sell the contract for a higher price and profit from it. But if you're wrong, you might lose money. BSE offers a wide range of products such as equity, currency, interest rate, and commodity derivatives along with debt and market turnover. NSE, in opposition, offers equity, commodity, currency, and interest rate derivatives. Due to its limited liquidity in derivatives trading, BSE is less popular among derivative investors. NSE, especially with Nifty 50 and Bank Nifty, dominates the derivatives trade market. So, even though BSE offers a broader range of products, NSE remains the dominant player in derivatives due to its larger trading volume and wider adoption. Moving on to our last round, market diversity. For market diversity, let's consider investor type for this context. That is, the different types of investors such as retail investors, institutional investors, high-frequency traders, etc. NSE has over 2,500 companies listed as of February 2025. And its primary focus is on financially stable and heavily traded companies, or in other words, large cap stocks. BSE, on the other hand, has over 5,500 companies listed as of February 2025. This huge number is due to smaller businesses and startups looking to raise their capital, resulting in a high number of small and mid-cap investors, which results in a higher growth potential, but also higher risk. Even before reaching a conclusion, we do have a clear winner. With its diverse range of investors, BSE. Ultimately, both exchanges are reputable, and the right choice depends on the types of investment you are looking to make. If your focus is on high liquidity, large cap stocks and derivatives trading, NSE is likely the better option. However, if you're looking for diverse investment opportunities, BSE could be a good fit. If you want to start trading with NSE or BSE, you'll need a demat account, managed by a brokerage firm such as Alice Blue. To learn how to open a demat account with Alice Blue, check out this video.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.